Good day, everyone. This is Chris Catcher coming to you from London, and we have Gil on the potentially sunnier side of things in Playa del Rey.
And warmer
Um,
too.
yeah, perhaps. Actually, we got some snow for the first time right here on Leicester Square just a couple days ago. It was a nice surprise. Unfortunately, it didn't keep up to be able to have any meaningful snowball fights, but I think we're coming into the coldest month next month, so maybe we'll get lucky. At any rate, the markets have been in an uptrend, especially after that backwards and forwards and filling back in December, and then we got the good news on the fiscal cliff tax issue. That was it resolved enough such that the markets made their nice gap up on the second of the year, which was the first trading day of the year. And since then, the markets have been in a fairly constructive, tight, sideways fashion. And today, the NASDAQ is moving to new highs out of that tight consolidation. The S&P as well. And if you look at the strongest index, that would be the Russell 2000. That also is actually making new long-term highs. I think all-time highs right now. So things look like all systems go as far as the major indices are concerned. Over in other venues, such as the Apple Farm, things are not so good. It had broken down. We've been in the news a number of times and written papers on the worm in the apple, and it hasn't managed to keep pace with the uptrending market. It's now well below its 200-day moving average, as well as the 50-day. You had the black cross, where the 50-day crosses under the 200-day back on, I think that was December 7th. And Apple now looks as if it is in a major downtrend. Interestingly, there was a Tom DeMark has indicators that call for intermediate term tops and bottoms with a fair bit of accuracy, and his indicator went bullish on Apple yesterday. So we'll see if his omen proves correct in terms of Apple having put in an intermediate term low here. I suppose a lot of it's predicated on an uptrending market, which we seem to be firmly in at the moment, and that could certainly help Apple have sort of a dead cat bounce rally here, which could last, for several days, in which case the DeMark indicator would be correct. Over in precious metals, we've got gold and silver coming up right to their 50-day moving average. We know that the Fed has announced that QE3 is here to stay. There has been a little bit of dissension in terms of phasing out QE3 sometime this year, but realistically, I don't think that's going to happen, and that's just based purely on the fundamentals of where we're at. The Fed does not want to derail what they believe is a very fragile recovery economically. So we have all the central banks basically en masse printing this call it QE3, but as I wrote yesterday, I think QE3 turns into QE forever. And as far as market years are concerned, that we could see this quantitative easing bit continue on, well past 2014. And that bodes very well for the hard assets, precious metals, certain stocks, real estate, collectibles, things like that, as opposed to currencies which seem to be in a pernicious race to zero between the dollar, the euro, and the pound. And all their central banks, the Bank of England, the ECB, and the Fed, they're all printing money. I don't want to say 1920s Germany style, but let's just say that there is a lot of money printing going on that we haven't seen in decades. And it remains to be seen what deleterious effects going to be caused by that sort of printing, because you can't print wealth. You can't generate wealth out of thin air. So I think there is going to be a price to pay for it. And in the meantime, we will just continue to watch our stocks, our indices, the precious metals, and so on to see if any buying opportunities that emerge as we move down this path. Gil?
Yeah, just gonna add some comments on Apple.
Can't hear you.
I'm just going to add some comments on Apple. If you look at the stock, whoops, what happened here? There we go. You have the neckline here, you know, but it's kind of like a zone. You could look at it as a zone of a neckline zone, more or less. You know, it's not really a hard line in the sand. You could say roughly the 500 level. To me, that was just a round number that if it was able to get up through, it's probably going to try to push a little bit higher. But what you really see going on here is, let me get these out here now. Just on a purely technical basis, I mean, forget about what some analysts says. I know Tom is pretty well regarded, and he's had a lot of correct calls, so people do pay attention to him. But you know, I don't think that's neither here nor there from our perspective, because all it does is create this jerk back up to the upside. But you're really pushing now into this sort of horizontal area of resistance, you know, which is these lows along the 500 level, and there's a little bit of, as Dr. K would say, porosity here. And so, you know, so it can flit a little bit above it. But I think the real issue is that's just saying break down before earnings, because if it doesn't, and you want to short it on the basis of a weak pattern, because it is a weak pattern, and you could think of this as a downside breakout, and all it's done is pull back to the breakout point. So even though there's a lot of points here, we always have to keep it in perspective in terms of the technical I'm sorry, the percentage move rather. So, you know, and the technical picture. So within the percentage move within the overall technical context is what I'm trying to say. So, you know, so that's really what's going on here. And you could look at it in terms of the 10-day moving average being possible resistance on the upside or this gap, which so far hasn't been able to hold this intraday peak here of 4 days ago. So, you know, that's really all that's going on in Apple. But the key is if you hold it into earnings, you're making a bet that it's going to blow up on earnings. If you're long it, on the other hand, you're making another bet, kind of like what you would have been doing on New Year's Eve if you were owning index ETFs, or as we know, one guy who was heavy on put options on the S&P overnight on New Year's Eve, and that would have created quite a hangover by Wednesday. But in any case, yeah, that's where we are with Apple, and let's see what else is going on here. Should we answer some questions, or just talk about what's going on with some stocks that we see happening? And you know, our own experience in the market is a little bit uneven. We've got some stocks have been acting okay that we've owned, like Valiant is continuing to act okay. LinkedIn, you had a breakout, and all it's doing is hanging out, going sideways. So we're probably going to be in a position of sitting here wondering whether we hold this into earnings. But I think if you have a 10% position, your risk is not terribly great here if they missed or something. But I think LinkedIn probably will have a good report. We'll see. But again, you're taking risk one way or the other holding into earnings, and you have to think about that. And that also complicates the problem of buying stocks, even if they are at buy points, and the idea of how much are you going to hold into earnings. And so it makes you have to think a little bit more about what you're doing on the long side, and it creates a little more, I'm not going to say stress, but it can be a little more, a little trickier in that regard. But some stocks, you know, will stop you out before, and I think that's what you have going on. Regeneron has a gap down here on volume, and it got support. You see the volume picked up, and it got support, rallied back to the top, and then it just kind of rolls over and is violating the 50-day moving average right now. And I think just on that basis alone, it would tell you to be selling the stock, or at least cutting your position pretty far down. Any comments on this one, Chris?
Yeah, we had a couple downgrades. That's what's pressuring Regeneron in the last couple days. So one could argue, well, you know, analyst downgrades on valuation and whatnot. But I think not just valuation; they were also concerned that one of their primary products is not going to exceed analyst estimates. So that's more material to the company, and the technicals spell it out just right. I mean, you know, today would have been your sell point if you're using the 50-day moving average as your guide.
Yeah, but what we do here is you have one gap down, and then you have a second gap down. That second gap down, no real support here, and kiss that thing goodbye. There's no real reason to own it, because if you're owning it, it's on the basis of this pocket pivot, and now you're below the 10-day moving average, and you're really not in an advantageous position. So for our money, we just would toss it there. But you can wait for the violation if you want to stick, strictly to the rule. So speaking of violations, another stock coming in is NSM. There's some news out today that the rules regarding loan mortgage servicers, I guess, and in particular forced servicers, which I guess I need to learn more about this business, but that's driving the stock below. It's just barely holding on right now, but it's driving it below the gap up day, the intraday low of the gap up day, and so that this is pulling back. My guess is this may not necessarily break down, but again, you're going to be in a position here. If you bought the viable gap up, I'm assuming you didn't buy it at this price, 36.71, where it's trading right now. So you're underwater on this trade and watching how this acts. For my money, if I'm trying to play this, I just back away and blow it off because it's not giving me any love. But it could just kind of pull in and go sideways for a little bit and then maybe come out on earnings. But again, you're playing earnings roulette, and it's not clear to me whether that's something I want to do. So you really have to decide what you're using as your stop. 36.60 is the low here. You can add a couple of percent if you want to account for some porosity. But it seems to me that outside of the big move up, you had another day of volume, and you really haven't seen any buyers stepping up. So it's just drifting around, and it's very indecisive. Chris, any comments here?
Yeah, I mean, you have two ways to play it. You can be strict. It had a viable gap up, but then one of the rules that I use is if it's traded for at least basically several days, generally 5 or 6 days, and comes back to that low point of the viable gap up day, then you sell it without porosity. In other words, the stock should have started to get going, and so you don't give it any porosity in that case. So in this case, you would have sold today as it undercut that low. The other way to play this a little more liberally, and you could use based on the price action of the stock, a 2%. And these are not hard numbers, but in context with the chart, roughly a 2% porosity below the low of the gap up day. In which case, you would have nicked it just as it hit 36.84. So again, you could elect to stay in this position on that basis, but make sure that your position size is manageable, and know that you're very, very, if it breaks below today's low, then you got to be out of the stock because it's just not going anywhere.
No, and it's somewhat disappointing. And to me, it seems like a lot of stocks have broken out, and you've seen pocket pivots, but there hasn't been a huge amount of upside progress unless you were in certain stocks before the market turned in early January. So in other words, you would have had to been long, say, stocks like Salesforce.com, which got hit yesterday finally for the first time. But this had broken out from here earlier, much earlier. Rax, the same thing, had broken out. So these have made reasonable progress as they kind of stair-step their way higher. But if you're buying anything recently, like LinkedIn, the progress is pretty minimal. But there's a buy point. It may hang out and go higher. Triple D, we own that. That's still acting okay. It's along the 10-day moving average. Pullback like this is maybe viable for it to get hit on big volume. That's not uncommon for a stock that's been acting really well and been moving sharply. You get hit here, but you hold mid-range, so that's constructive. And a lot of times you'll see something get hit on one big volume day, and it'll turn around and go higher, and that's what this is doing here. Some stocks that I've been watching on the short side, and I don't know how much traction you get on the short side because Lulu broke down. We had talked about this last week into the 50-day moving average, and it broke down and tried to rally back above the 200-day moving average. And I got a question on this. How do you handle something like this? And I think it's really a matter of what you're willing to sit through. So you can think about it a couple of ways. You had this gap down, and in the morning you're coming down to these lows in the base here, which is right around 66, I guess, or so. And you barely undercut, some of these lows along here, and so it sends it back into a undercut and rally type of move back above the 200-day moving average. And then you see heavy volume yesterday, and it reverses again. So if you shorted into here, you're actually doing fine. You could sit around, and it makes sense that it comes right into the 70 level, which is right along all these lows in here, which is overhead resistance now. And it's back down below the 200-day moving average. Now, technically, it has not violated the 200-day moving average because it would have to. Well, wait a minute. And this morning actually it did. Yesterday was your close, and then this morning it did, but it's gone back above. Am I reading that right, Dr. K?
Yeah, that's correct.
Yeah.
That looks
So it violated this morning. So, it's looking a little bit doggy, and maybe it heads lower. So, that's one short idea. But I think the same thing goes with Apple. If you're trying to short the market here, what you're depending on happening is for the rally to give way. And that may occur at some point because, a breakdown in Apple, I think, for example, doesn't work in an environment where your bias overall is to the upside. And so it takes a little more time to work. And it may be that this thing doesn't really resolve and blow apart until earnings are announced. But the pattern to me looks weak. And on that basis, one could, if one was a gambling man or woman, take a position, say a 10% position going into earnings on the basis that the stock is already telling you that it's going to be weak. And now there's, everybody's instantly getting bullish on the stock thanks to Tom DeMark's call yesterday. So, that's kind of where you're at with the short side. I've been looking at some of these biotechs, and a lot of them are breaking down. This is a head and shoulders with an ascending neckline. And this thing's rolling over. Got hit with some volume yesterday. To me, it looks like it's heading for the 50-day. Probably going to go through it. I did short some this morning on the little opening bump to the upside, and it's starting to roll over. But I'm kind of playing this market on wherever I can make progress, long or short. And I would say net, the progress is minimal, and it's just a little bit difficult. And I think unless you were in, say, mid-December, you're not making as much progress. That doesn't mean you won't later on. And hopefully you'll filter out, if you get stopped out of, say, a Regeneron like we were, or a NSM, your other stocks that are working for you continue to work and make up for any of the tiny losses that you have to cut out real quickly. But that's part of the weeding out process and sort of pruning your holdings. You see what works and what doesn't work. You take, say, 5 small positions and 2 of them don't work, you're out of them. Hopefully 1 or 2 of the other 3 will eventually work out. And I'd say Triple D is probably the surprise here as it continues to go higher. The things that look too high just tend to go higher. And Valiant also moving higher. But anyways, that's kind of how it is on the long side. So I'm going to go through some questions. Somebody's asking about Cerner. Is that within viable range of what? Is this a breakout? I don't know. This is the base. Yeah, I guess that's the breakout. It's pulling back to the 50-day. If you really love this story, I guess you could buy it on this pullback, but I'm not. I'm not too thrilled about this. There's not really much volume on this weekly chart on the weekly breakout 3 weeks ago. Chris, you got any comments here?
Yeah, it's a pretty slow pattern. It's sloppy as well, so I'd rather go for a cleaner, stronger pattern.
Something a little more juice in it, perhaps. Let's see. I want to take a look at the earnings here on this thing.
Well, earnings and sales also are slowing up a bit, just a bit. But really, the problem I have is the overall pattern. I mean,
yeah.
When you look at the weekly, it's just been a very soggy pattern for the last year and a half.
Yeah, looking at this longer term. So, on top of that, you have a 71 relative strength. So it's really not a leader right now in this market. It's kind of a choppy, sloppy pattern. Somebody says our webinars are well worth the $100. Is that all we're charging for these things? I thought you told me it was $1,000. That's the only reason I've been the one leading the conversation. Well, I'm glad I'm letting you take over now. So, anyways, all right. So let's just rip through a few of these. Somebody asked, CF, is that viable? This is a pocket pivot here, but it's in a stock that doesn't really have the earnings profile that we've been looking for. But that's not to say a lot of stocks with 10% earnings growth like MasterCard haven't gone higher. I mean, you've seen Disney going higher. You look at, say, J.B. Hunt today moving higher on a breakout, but there's no real volume on it now, I don't think. Maybe I'm wrong here. 47% above average. So it's breaking out, but 14% earnings growth in the most recent quarter. eBay is also 17% earnings growth in the most recent quarter, but it's gapping up today. Dr. K, is that a viable gap up?
Well, technically it is, but the thing is with eBay, I mean, it's got the viable gap up on a good earnings report, and it's done this actually in the last two earnings reports were also quite favorable. Last four reports actually, last four. So at any rate, it's it's in a nice uptrend here, but it's a slower uptrend. It violates the 50-day. Keep that in mind. So if you're going to play this, you assume that you're going to have to sit through some level of pain as it violates the 50-day. That's my only issue with the stock, and it makes it a bit of a slower moving stock as well. But it might fit the risk appetite of certain investors.
Yeah, which is a big cap. It seems like there's a few of these that have been working. Oracle's also been acting well. JB Hunt, of course, is a trucking company, but MA, though, that's a big cap name that's been acting well. So Oracle, go back there, that's been acting pretty well. Warehouser, has been acting well. Although again, what do you have here? They've got a one-time charge or gain, I guess, that's fluffed earnings up 175% in the most recent quarter. And I think estimates for the next quarter are what? Can you pull that up, Chris? I'm not able to pull it up right now. I don't know what's going on here.
It's slow on my end too. Okay, here we go. Earnings are accelerating nicely to 83% in the last quarter. Sales accelerating to 13%.
So what? You got 13% sales growth. So is this the Weyerhaeuser is something's wrong here. Is this really a finance property REIT, WY?
No, WY deals with wood products.
Right, I know that, but I'm picking up on my Wanda. It's showing finance property REIT.
I misplaced it, but they do a lot of timber, that sort of thing, and
okay.
Wood, basically wood products for real estate and whatnot. So the stock looks pretty decent here. I mean, the earnings acceleration is nicely impressive, and so it's not surprising to see the stock in an uptrend.
I'm still trying to pick up the earnings. I have different numbers than you. I have nope, I can't bring this up for some reason.
Also, the institutional sponsorship has been increasing over the last 7 quarters, except for one quarter being a minor downtick. But other than that, 7 quarters of increasing. Actually, the number of funds have been.
Hang on one second. I'm gonna shut my microphone down. I gotta get this. Hold on.
So at any rate, this Weyerhaeuser looks. If you own it, there's no reason to sell it. But I would wait for a pocket pivot in this name. And again, it's keep in mind that it tends to violate the 50-day. So
which one are we looking at?
The Weyerhaeuser.
Going back, okay.
So it makes it could be a tough hold, and it's not the fastest name either. So keep all that in mind if you decide to get into this.
Yeah, I mean, there's a breakout here. I guess you could have bought it there, but I'm trying to pull the numbers up. But as I recall, it was not all that exciting. What do you show for sales growth in the most recent quarter?
Well, for the 13%. So it went from 5 to 11.
So there you go. It's accelerating, right? But it's still
not bad for this kind of company. I mean,
no, but it's telling you what the market's going for, I think. And you're seeing some of these big, steady big cap growers. I remember there was a time, I forget when that was exactly, but I think it could have been in 2001, coming off of that one low, where you saw a lot of that going on. Big cap names, steady big cap growers were what the market was buying, or what institutions were buying and putting money into. And that may be what they're doing now, because they're somewhat cautious, and maybe you're seeing a shift away from the Russell type names, which I think is mostly driven by the financials moving higher. Don't you think, Dr. K?
Well, yeah, you have the big cap financials, and that's been one of the strongest areas for the last few months. And that certainly helps the big caps. However, the Russell 2000 has been outperforming the NASDAQ and the S&P 500 for the last few months as well, just because there's more risk on based on QE and also the fiscal cliff tax issue largely behind us.
All right, let's go through some more names here. Rubin Networks we've been asked about. To me, this is 29% earnings growth in the most recent quarter, and I'm still not able to pull up a quarterly block here. I'm not sure why. What are you
Yeah,
showing for the estimates there?
it looks, you got 25% for 2013, 24% for 2014. Fiscal year ends July, so basically there's 3 more quarters left in 2013. It looks like a steady grower. It's what I don't like about this, really, my issue is that it's not a leader. I mean, you can see that from the chart.
Right, it's just coming out
so,
of this big ugly pattern.
Yeah, it's not. I think it's going to be a second-rate name, and therefore, you want to marshal your capital into the leading stocks and leading industry groups, and this is not one of them.
Somebody was asking about cores yesterday being a pocket pivot. Even though that bar is blue, it does show that you had a gap down and you moved up. So the volume was up yesterday, so it got support like in a pocket pivot volume signature, but not in the form of actual pocket pivot because you weren't up on the day, and today you're coming in. So I don't know. What do you make of this one, Chris?
Yeah, Cores has been a bit of a sloppy pattern. It's going back and forth between the 50 and the 200-day, and it's not exciting to me by any measure until it corrects these defects. And it could do so within the next few weeks, or even less time, but it would have to get clean in the pattern. Right now you can see lots of down days on big volume, so that's a defect, and it's still hovering, around its 50-day in a non-committal fashion.
I'm just taking a look at this ONXX breaking down pretty sharply intraday. So, the interesting thing about Apple yesterday, I was just going to point this out for using this chart, is that yesterday this thing was moving higher all day, and it never broke down. It just kept going higher and higher. Then finally, at the end of the day, it started to come in a little bit, and it faltered by the close. So you actually got a short sale signal here at the end of the day. Not sure you're going to take it, but just pointing out what's going on with Apple. And right now what you're seeing is a breakdown here, and this has actually stayed below the whole way. So this was shortable earlier this morning, right around the opening when this thing broke, and it's still holding so far. So interesting. So it's kind of giving up some of the juice that it had from yesterday. But like I said, I don't think just because one guy says he's calling a bottom in Apple, I don't think that necessarily means it's a bottom in Apple. So, anyways. Let's see. Ulta is another one we're looking at here. Is this a short? It's a squirrely stock, and it only trades 817,000 shares a day, so I just avoid it. It doesn't trade enough. If you have a small account, you're going to short a couple 300, maybe 500 shares, maybe 1,000 shares. You could probably go ahead and do this one, but I don't know. This one's a squirrely, choppy stock, but it looks ugly as all sin, and so I'm certainly not going to buy it. Netflix has been positive and suddenly is dropping like a rock. Well, I don't know. It's dropping like a rock a few times like it is now, so I'm not sure this is any different than anything it's done previously on the uptrend. So, and I can't tell you that we're in a reversal here because this is not even anything I'd be looking at as a buy or even really as a short at this point. Given that it's just kind of coming off of the lows of this ugly base. So I don't really have any interest in Netflix. I don't think it's dropping like a rock because in case that woman's voice saying AAPL got in the way there, it's not, let me repeat that and say that if it's dropping like a rock, then it's just dropping like a rock like it has several times in the uptrend. So there's nothing different here in terms of how it's been behaving. So I'm not a buyer, and I'm not really considering Netflix, and I can't tell anything from this pattern. Can you, Dr. K?
No. This is off my radar.
Yeah, IACI. We were looking at this one last week, if you guys recall, and Onyx continuing to go lower. You could tell that thing. There's something wrong with that thing. Sometimes biotechs with no earnings can be great shorts in the right pattern because they have no earnings, and so the conviction or at least those that have no earnings, a lot of them don't, and when they get into weak patterns, they can come down pretty hard. That's one of the beautiful things about them. And Onyx is kind of even illustrating that, because I think we were only down about 45 cents when we started this webinar. In any case, IACI, we talked about this last week, how you've got this big, ugly head and shoulders formation, so you're coming down into a neckline area and support, so you'd have to see how it acts from here. But I think you had to short this one on the break at the 50-day or up into the 200-day. At this point here, the risk is that it bounces off support, but just watch how any bounce occurs. But it is an ugly pattern, and I think it is a short sale target. I just don't really think of it as being that fast of a short sale target, since it tends to be a slower stock, but it doesn't look like it on this break. It seems starting to look pretty butt ugly. So NSM, let's see, reversing. Yeah, well, it might be someone saying that the NSM, OCN, all these stocks came in on this news of the new mortgage rules. And they're reversing. It might be a shakeout, but I don't see why you have to really worry about it. It just comes down to what your stop is on the stock and whether you're going to try and buy into some weakness. My view is this stock is a little bit feeble and has been feeble prior to the news. So I'm not going to sit around and mess with it. We'll kind of keep an eye on it and see what happens here. The only other thing that would bring you into the stock would be a pocket pivot back up through the 10-day moving average, but it seems like it would be premature to do it right now. So maybe it's a shakeout, maybe it isn't. But given the volatility in this stock, I don't really need to sit around and wait for that to happen. So, especially if I have a couple other stocks working, both on the upside and the downside. That's my view. But what's your take?
Well, like I said, I told people what they could do with this stock. I mean, they could sell it based on the breakdown and below the low, or they could just keep holding it because it hasn't. I mean, it's basically scraped the 2% porosity below the low of that gap up, and the industry group is still strong. Everything's looking pretty good about this group in terms of the price performance, and NSM seems like one of the leaders. So I mean, there's all kinds of ways to manage your position. I know a lot of people ask about position sizing. That is a critical element. So if you're unsure, you could sell half your position. Why not take half off the table, and now you're sitting with half of what was, and if it goes higher from here, you still have half your position, and in all likelihood, if it does go higher from here, it probably will issue another buy point in the form of a pocket pivot. So then you can round out your position once more.
Yeah, I mean, if that's what you want to do. So, but somebody asked a good question. Where the heck are the cleaner patterns? And you're right. In this market, there aren't a lot of cleaner patterns. I think LinkedIn is pretty clean here so far. Amazon was looking pretty clean, and then you had this break. Now it's looking cleaner again. DVD has been anything but a clean pattern. But you know what? If you look at it on the weekly chart, it looks less chaotic. So, this you got some big volume here on the last week, and that was supporting volume, and that looks pretty strong for the stock. And so, sometimes when you can look at the weeklies and maybe get a better picture of what's going on with a lot of these stocks, and that's probably something that you definitely want to be doing. If something looks this noisy, that's kind of how we're looking at it now. And I remember Bill O'Neill telling me that if he was stuck on a desert island that can only have one kind of chart, he believed he could make money just using weekly charts and nothing else, and setting sell points on that basis. And so, Yeah,
there was a study I did. It dates back to 2006, I believe, and it basically was to print out loads and loads of weeklies in different market cycles, bear and bull. And when I say loads, I mean thousands. And I went through each chart, moving a piece of paper over it, just so that I couldn't cheat. I wouldn't know what's going to happen. And I used just technical buy points. And I had the earnings line also on there, so I had the fundamentals, the quarterly and the annual, and I just used basically the chart technical action, though, primarily, not so much the fundamentals, but the technical action to get my buy points. And I'd have to agree with Bill. I mean, I think the weeklies are the most valuable. If I only could have one chart, it would be the weeklies. But that said, I rely on the dailies, and obviously for pocket pivots and more intrinsic buy points. So we have the luxury of using both. We're not on a desert island.
Sometimes I would say, unfortunately.
You have to buy the island.
Dave Eccles is asking about Proto Labs. And well, Dave, all I can say is it's extended, and it is a thin stock, though. But it trades, I don't know, it trades a million. Whoops, no, that's 335,000 shares a day, so it is a thinny. That's why they're running it up. There's probably a couple of brokers out there who are recommending it to all their retail clients. They're running it up with their ones and twos. That's trader desk lingo for 100 and 200 share orders, onesies and twosies, as we used to call it. These days, that's all it trades. That's all the algos will traffic in. So now all the prints you see are just ones and twos these days. But in any case, that's how this one probably trades, and they're running it up. So I don't know. What does this look like to you? 32% earnings in the most recent quarter. It's a thinny. Electronic parts. What is this?
Yeah, they're using these parts that electronics companies use during their prototyping phase of the product development. So in any case, it doesn't seem like a killer app, and the chart certainly doesn't show it to be a leading stock. It's just really been sideways since the IPO. So I'd be really careful with this one. There's a lot more risk that I see in the pattern, and the fundamental numbers don't blow me away at all. I mean, it looks like that the fundamentals used to be quite a bit stronger, and now they've slowed down, with earnings most recently at 32% and sales at 21%, compared to a few quarters ago where they're triple digits or high double-digit numbers. So yeah, it's a thin one, and be very careful.
Yeah, but I think if you bought it, and you're not dealing with big size, say a couple thousand shares probably, then you're up on it nicely and it's working. So obviously you could stay with it. Let's see. Is Ulta a possible late-stage base failure? Well, it is. Here's a cup of the handle breakout, and you blow down below the 50-day moving average, and now you're trying to push back up. It's definitely a wedging pattern. So I guess you could try to short into this, but again, you have to ask yourself, are you in a bull market or a bear market? And I think that definitely complicates the short side of the market. You have to pick your targets selectively, I think, and then hit them and be ready to run away. So I'll even give you an example. You guys know I'm short this, as I told you earlier, and it's come down pretty hard, but notice how it's sitting right at the 50 days. So we're watching this, I'm watching this, and if it doesn't blow through this on some volume, I may cover all the position or part of it and see where it goes. But it's working today. But that kind of shows you what you're looking at on the short side. You're coming after. I think once something gets some velocity on a volume break and it's able to or closes at the lows. I'm not going to say it's able to close at the lows, but rather it can't do much more than close at the lows. That's pretty weak. And the odds of it going lower, if you get a little blip on the upside the next day, like we did this morning on Onyx, the odds of it going lower are pretty decent. But you may just be hitting these for a couple days because again you're in a rally phase. I mean, even though it's uneven and some stocks have been breaking down or at least throwing fits here and there, you're still in an overall index rally, and so that does kind of put the pressure more to the upside than the downside. So it doesn't mean you can't hit something, but I think in a lot of cases, know where your out points are and know where your support levels are, just like we're looking at with the Lulu. If you're short this one, be aware of the fact that you're coming down into a support area. Or an Onyx, for example, be aware that you're coming down into the 50-day moving average. And if you got some profits, maybe you take them. So, like I said, the only time I'm really a day trader is on the short side, really. So, although I have to admit I've done it a few times on the long side, but not usually the case on the short side. You're moving fast and furious. When you go over your previous year's trading log with the hope of finding what you did wrong, right, what specific things do you first look for? Everything I was screwed up on. How's that? I like this. I know you use the 5-minute for your 620 thingy. Do you also use a longer time frame, like 15 minutes, for further confirmation or a longer trend up or down? Sometimes those help you, like a 60-minute or a 30-minute, you can see where some of the support areas lie. And where you may see a bounce or to help you time your entries better. But yeah, that can give you a little more perspective. So, but you don't want to overdo it. It's kind of like the 5-minute and the 30-minute chart. It's kind of like the the daily and the weekly in the world of day trading on the short side, I suppose, and that's kind of what's going on there. So, but you can see Onyx gets a little bit initial support off the 15A. You can see it bouncing a little bit. AEGR, can we comment on this? Ageron Pharmaceuticals, is this a money losing? You got anything on this, Dr. K?
Let's see.
Losing money?
Yeah, it's in the red, and it's going to stay in the red according to 2013 estimates. So it's a typical, it's a typical biotech company that has some promising products in the pipeline, and therefore it poses more risk because of the lack of earnings, and it's also a very thin stock, so it's got a double strike against it. I wouldn't be playing this kind of name. I mean, yes, it could continue higher, but there's a lot of risk associated with this kind of name.
Let's see. How about V? Well, V is another one of those, I think, that it's like MA, 21% earnings growth, and it's holding tight along the 10-day moving average, so volume is drawing up. So it looks like it wants to go higher. You know, that's what I would say. But it's acting fine. You know, the gap up here, I don't know if that's viable. I think for the most part, you know, you're looking at 15% sales growth, 21% earnings growth, stock selling at 26 times, trailing 22 times, forward estimates next quarter going to be up 20%. So again, this is another example of this sort of big and steady type of company that the market's favoring right now. So V, if someone's asking, is V2 overextended for a long entry? I think what you're doing here is you're waiting for a pocket pivot. But earnings come out when? First week of February, is that right?
February 8th, according to Wanda.
Yeah, so... Oh, they converted Weyerhaeuser to a REIT, somebody's saying. A little bit late in the queue there. I got to that one finally. But... that's what's been driving Weyerhaeuser. Like everybody's going to convert to a REIT, just like Equinix did, and that one's been acting pretty well, and it's bopping along the 10-day moving average after this gap up here, but there wasn't enough volume on this gap up to be a viable gap up. But, you know, there was enough volume on NSM's viable gap up, but that thing didn't go anywhere, and there wasn't enough volume here, and yet it does go higher. So, you know, it's just kind of like sign of the times, sign of this market. What you think should work the best doesn't. And sometimes the things that you think aren't so exciting, like good old Krispy Kreme donuts here on the pocket pivot and the gap up here that we talked about, and then this one, this has continued higher. So it's just kind of like that. You know, I was even looking at Vimple Communications. Anybody remember this one? Vimpelcom. It is now. This is a Russian cell phone company, right, Dr. K? Am I right?
That's right.
Yeah, and I know this one hits my radar screens for a huge increase in volume yesterday, and look at this thing just rocking to the upside. And here's what the pattern looks like, you know. And you're seeing a lot of these. I think, you know, even when you're looking, does anybody see a pattern here that's kind of like technical analysis 101? The reverse head and shoulders, you know, you see it here, and you see it in a stock like ARUN. So you're seeing this in a lot of doggy stocks, a lot of junk type names, and they're all junk off the bottom stuff, and you know, that's just kind of what you're seeing in this market, and it's a little bit it's interesting. There have been other periods where that's occurred. I remember 2003 there was a lot of that, and of course 2009 there was a lot of that as well. So for all you know, the Obama policies, I even point this out with respect to some of the building stocks, you know, the people I was asking about, which continue to just kind of truck on higher. You know, Lehman, no, that's not. I'm looking at PHM and Lennar.
Yeah, MDC.
And, you know, and the financials, MTB is one I was looking at this morning. You picked up a pocket pivot right there on it yesterday, and they got pretty decent earnings. 220. Let's see. Whoops, no. Yeah, with 93% and 50% over the last 2 quarters. So, you know, that's another financial. It's got some good numbers. It's acting well, M&T Bank. But you have to wonder, with Obama policies continuing to pressure banks to make loans to people who can't pay the banks back, and all of this QE out there, are we sort of fostering an echo bubble in housing that is going to create an even worse pop at some point? That's what I'm wondering, and something to think about. But whether it's a bubble or not, the fact is it's going to inflate asset prices, and that seems to be doing what it's doing with respect to housing stocks and housing names and financials as well. So that's something to think about, but it could definitely drive a playable rally, and I think so far that's been the case in the builders. And a lot of the building-related stocks, like Lumber Liquidators is one, which is trying to form a cup with a handle. This is not a pocket pivot, and then you actually got the signature this day, but it was already extended, so it's pulling back in. They're coming into earnings. This stock has had a nice run off the lows, but really kind of broke out in here, and you're in a later stage base here. We'll see if this thing breaks out again. But somebody's asking about NTE, got caught in it. Would you give it more time? I think what happens here is if you have a pocket pivot and you've broken down below the 10-day moving average, now you're violating the 10-day, and I think you're undercutting all these lows. If you give it more time, number one, you're violating any sell rule. But I think this also just points out the inherent risk in $15 stocks. And I've thought sometimes maybe we should never put out a report on a $15 stock having a pocket pivot, but then you would miss things like Krispy Kreme donuts, for example, or other stocks that we've had in the past. Like I remember InvenSense, INVN from last January 2012, which had a pocket pivot around 11 bucks, I think it was. And so you would miss those, but you have to remember when you buy one of these cheap stocks, especially a Chinese electronics company, I think you're buying into an unknown quantity, and I've never really cared much for any of these stocks, so I would never really buy this, even though it was a pocket pivot and it was a bona fide pocket pivot. But once you get this gap down move like that, that's just trouble, and you have huge volume. So I also think there's two issues here. Number one, you've got a technical occurrence on the gap down here right after the pocket pivot. That shouldn't happen. And so as soon as you see that, I would be reacting to that pretty quickly myself if I own the stock. But I can tell you, for the most part, I wouldn't buy a stock like this to begin with because there's a quality issue. So you have to think of it in those two terms, and hopefully you didn't have too big of a position. But if it's knocking you back, 10 or 15%, you're already in stop-out land, and you can try and sit around, but I can't tell you whether this thing's going to turn around or not. This looks like trouble to me. So
yeah, in this kind of market, I mean, there's people who like to play the small caps, and the Russell 2000 has been outperforming. And so if you're gonna elect to play the small caps, always know that they carry more risk, so position size accordingly. So instead of maybe your normal position size 20% in a stock, I would say be no more than half that in something like NTE or any of these small caps, because they all generally carry more risk. NTE appreciably more so, as we said in our report. That's a Chinese stock. That's a thin name. So, there's two strikes against it. But if it works, then you could be in the money very quickly as well.
Yeah. Here's one for your VIX fetish, Dr. K. SVXY, is it a buy? Well, I guess since you didn't put out an email that the VIX model or the UVXY model is on a sell signal, or did you?
Yeah, no, it's UVXY is on a sell signal, so.
So then that, I guess, would make this a buy. Is that correct?
Anything that's related to UVXY is going to be on sell. That's going to be a sell signal. So SVXY being the inverse of UVXY would make it a buy signal.
Buy. Just
like VIX versus XIV. VXX versus XIV. One is the inverse to the other.
Okay. Let's see. Tibco. Rallying right up into the 50-day moving average. This has been a pretty ugly stock, big. This is what you call the mountaintop top. Just a big rolling range of peaks, and then it finally blows apart. I guess you would call this a head and shoulders, but there's no real volume here on the breakdown off the peak here. This has been pretty ugly though. So it's rallying into the 50-day, and somebody asked if you short it. I guess 0% earnings growth. Earnings come out in March. I guess you could short it here. It looks pretty ugly, and I guess you would just use, say, the high of 5 days ago, or the 50-day at 22.88 as your stop if you wanted to do it. It's a pretty ugly pattern. These guys were supposed to be hot in social networking for commerce, I think it was. Is that right, Dr. K? And then the last quarter they announced 0% earnings growth, and the next quarter -9. So the fundamentals are pretty ugly, and everybody probably knows it, but it could break down. So it is in a downtrend, and a body in motion will tend to stay in motion. So everybody's sending in comments about Weyerhaeuser that they own a lot of land, and that is true, and so I guess they convert to REIT status for tax purposes. A sign of the times, isn't it? And Al Gore making sure he got his sale of his money-losing cable station up to Arab oil interests. You gotta love these guys. I love politicians. I think in general are of the ilk of do as I say, not as I do. I don't care what party they're in. So, but anyways, I won't go off on any politics lest I offend anybody. But as Dr. K knows, I love to be offensive, right? Right, Dr. K?
It comes naturally to some.
Yeah. I mean, what can I say? It's it's just burned into my DNA. My dad's an even bigger asshole. At least my genetics were diluted by half, fortunately, because my mom is actually a nice person. But in any case,
I don't know. I haven't seen the side of your dad. He's just a very he's a sweet gentleman in my book. But
okay,
I didn't have to come up with him, so.
Yeah, well, you only catch him in certain contact. Anyways, VMed, Virgin Media. Is this Richard Branson's company? If it's Richard Branson's company, just buy it. That's what I say. This thing's moving along nicely in a nice big uptrend. Big massive cup thing here, just has continued higher. No buy points, except yesterday you had a continuation pocket pivot, just like you had a continuation viable gap up. But what do the numbers look like? Most recent quarter, 74 cents. That's a 295% increase. But again, here you have a 6% sales increase on this thing, and that just doesn't get me excited. But next quarter, what is this? $29.58. Is that an estimate correct, or are you seeing that?
Yeah, I don't understand these numbers at all.
Yeah, something's wrong. I think O'Neill database might be having some little issues. Sometimes it has hiccups. I mean, I remember from working there would be hiccups. I mean, it's a complex database. There's a lot of stuff in it, and I don't know. Sometimes you get server hiccups. I guess I don't know. But in any case. Let's see. Let's see. Somebody says you issued a pocket pivot on this stock on 116.13. That would have been yesterday. Well, that was yesterday, so that was a pocket pivot, and it's off the 10-day moving average. 11% past pivot and extended. It's not extended. I mean, this is a continuation pocket pivot, so it's not. Excuse me.
I don't believe we actually entered one in on the stock.
What's that?
I don't think we mentioned the stock.
No, we didn't actually. Did we put a report out? I don't remember.
No, we didn't.
No, somebody else must have. Somebody's stealing our stuff. Oh well, it is open source. Someone says read the book as usual. Fantastic read, just like the first one. Just one feedback. Stylistically, when you discuss the continuation pocket pivot, the constant comparisons to O'Neill methods is somewhat distracting and unnecessary. In what context, though? I mean, when we talk about, I think the pocket pivot and I think when you discuss it, you do have to discuss it in terms of the O'Neill methodology, because the way that Bill likes to add to positions is, you're up a certain percent, you add, you're up a certain percent, you add, you're up another percent. And I can remember he would be adding stock, especially I remember AOL in 98 when he was buying that, and I remember being in his office, and he pulls a sheet of paper out of his top drawer, and he tells me, hang on a second. He's like scribbling notes and doing this thing, and he nods to himself, then calls a trading desk and buys 300 shares of AOL. So he's like piling every penny into it at that point. He made well, I'm not going to use that term, but a poop load of money on that stock, and I watch him do it. It's an amazing thing to watch. And but he would be piling in right to the very end. But there's a certain, to me, inexact approach just adding to stocks up 2%, because a lot of times what happens is you have a stock move up, it breaks out, then it goes up another 2%, another 2%. And I think in the 90s that worked really well because stocks would break out and they'd keep going, you know, and you don't see a lot of those do that these days outside of Celgene. But I think the continuation pocket pivot in that context, in terms of how you add the stocks, it's a very coherent and very specific point at which you add, and you're adding on confirming strength in the stock. So I think it's a much easier way to handle it, because a lot of times you get up, you know, stock goes up 2 and 2 and 2%, and you're into a heavy position pretty quickly, and then it yanks right back down, and so you're buying solely on the basis of it moving higher. But in these volatile markets, you get whipped back in, and I think the pocket pivot the continuation pocket pivot rather, provides a very coherent and exact, precise way. Precise is really the word I'm looking for. Way of handling, you know, adding to your positions, and so it makes perfect sense for us to talk about it in that context. I mean, we don't mean we're not putting down Bill's work or Bill. That's a bunch of baloney. If anybody ever thinks that, we just have the methods that we devise because you have some difficulty, and I think everybody has a certain difficulty in handling different methods. You know, for Bill, just to keep buying a stock when it's up another couple of percent, just loading it up the whole way. He told me when he bought. When he made money in Amgen, big time, I think in the 80s, he was buying it up every point. He would just buy it up every point. And sometimes in some things like the SLV ETF, we talk about it in the book, we just added to that position every 10% up. So, you know, that puts you in a better position because if you're up 10%, you have a nice cushion when you're adding. But we're comfortable with that, and some people are not comfortable with it, and they'd like something a little more precise. And I think especially in volatile environments like you have today, continuation pocket pivot is a very clear way to add, and it's just something that we came up with. And I know a lot of people use O'Neill methods, have their own little stuff they watch, their Bollinger Bands, and you know, somebody pointed out to us yesterday that Apple, there's some Bollinger Band and it comes right to either side. So yesterday it hit the low point of it, and so it was you cover it and then you short it when it moves back. You know, and maybe that works for them in terms of handling a position. So there's different ways, you know, as far as where the rubber meets the road in terms of handling things, and the little devices you might, devices and techniques you might create as a result of that. But, you know, I think it does make sense for us to talk about it in that context. So just to answer that question, I think some people think, though, that we're putting O'Neill down, which is not what we're doing at all. GNRC, is this Generac? These guys make generators. Yeah, you know what? I'm looking at this thing. You got a pocket pivot here, but you know, 4% earnings growth. But you know what this is all about? It's all about generators, and so maybe this is telling you that we're about to be on the verge, or we're on the verge of a societal breakdown that is going to see the electrical grid come down, and nobody's going to have any power, and so we're all going to have to run out and shoot somebody who already owns a generator and take it from them in order to have power. So. That I guess would be utter chaos and not something you want to see, but maybe that's what this is telling you, or that the whole world is about to run out and buy a whole bunch of generators. Your take on this one, Dr. K? You can give us a macro view and throw in some political commentary as well.
Oh, as far as you're talking about GNRC here?
Yeah, negative 8% earnings expectations or growth expectations for next quarter.
Last quarter was only 4% earnings, so that's obviously a huge red flag for this kind of name. Yeah, it did have that gap up on the earnings report, but it really hasn't moved anywhere. And notice how it violates that gap up 3 weeks after, and so that would be on November 26th. And
right.
So you know, if you had sold it on the violation, you know, your money really hasn't been moving very much. And I mean, it's kind of drifted higher, but it could have equally gone lower. So. You're best to sell there, and as far as getting back in, I'm not seeing the technical evidence. I'm not seeing enough of a thrust in this name. It looks like it's going to drag on higher unless there's some sort of news event that occurs, but this is not looking it's not looking robust.
Right, and even though you have a pocket pivot, there's no big volume driving it up the right side of the base. You know, it's pretty light in here relative to this big downside volume, but you know, it's moving higher. So, but I don't think it's one I would buy And that's been, the perplexing aspect of this market is that there are a lot of stocks that I wouldn't buy because they don't really have the right fundamental or sales growth, or earnings, whatever, return on equity, but they work. I didn't like Kihu because it was 25% earnings growth in the most recent quarter, and the estimates aren't all that great, but it's still been driving higher, and it's been one of the better stocks. So
I like RC when it had the first viable gap up, and that was on October 1st, because that was coming out of a fairly constructive tight basing pattern, and you can see that on the weekly.
Yeah,
and,
here.
And then it sailed on higher, but then then you would have basically, in terms of sell rules, it violated the, let's see, 4, 5, 6, 7. It violated the 10-day. It looks like on the 7th week, 3, 4, 5, 6, 7. In which case you would switch to the 50-day moving average. But then on November 26th, when it undercuts the low of that gap up, you're out of the stock. So you sit in a reasonable profit for that time frame. But since then, I don't really see any entry points. It just seems a bit sluggish.
Yeah, but it's trying to build a base. We'll see what happens. I'm going to rip through some more. We already talked about Coors, not a pocket pivot, just trying to hold the 50. I still don't really care much for this base. It still strikes me as a base under a base. So I don't know. I'm not all that thrilled with it. And when you see what happened to Lulu, I don't know. I'm not a buyer. Pier 1, is that what this is? Pier 1 Imports. Yep.
Yeah.
Just kind of a slow name, I think. 19% earnings growth, trying to break out of a base, so it doesn't excite me. So maybe that means it's going to go a lot higher. Who knows? Let's see. I'm going to try and rip through some more here. TIFF as a short. I think we keep talking about this every week. I don't know. I'm not going to really short this one in here. It's holding above the 50-day moving average. There's no real sign of a breakdown. Maybe this is a double top. It's been pretty ugly for a long time, so it's pretty obvious, I think, as a crummy stock, but I guess we'll just have to see what happens. But I'm not really going to short this one myself. If you want to, you can. Arena Pharmaceuticals. I've been watching this one try to break out. You had a pocket pivot type move here. You're extended from the 10-day moving average, and it's trying to break out. These guys make the fat drug or the fat pill, right? Is that right, Dr. K? So you got a couple of weeks picking up volume in here. So that that's acting okay if you like it. It's a small stock, biotech, so it's a usual thing. Let's see. Short starter position on DKS. I don't know, Dix. I don't know. I guess you could short it here using a stop, but again, the market's going up, and interesting that we still get a lot of questions about trying to short stocks, of course. But then I'm over here shorting stocks as well. Comes up to, that's a point of resistance. So the question is the market going to break down? You're going to make a lot of money here. So I would say you can take a shot, and it is an ugly pattern here in terms of a base failure here. So it's in that zone. So I would just like to see the market roll over. JPM had a pocket pivot yesterday, so it came out after earnings, came out with earnings and then rallied higher, and you had a pocket pivot off the 10-day moving average. So is Google Pod on the weekly? It depends how you scale this one. If you look at this on say stockcharts.com and look at a weekly chart, Pod, no, Goog, not Pod, okay. Here's a big, ugly sort of thing, and it looks kind of ugly there, but here it kind of looks more like a cup with a handle. I would say the breakout is starting to fail, so you might have a breakdown through the 50-day moving average. That would probably tell you that you're in failure mode. So, anyways, I'm watching Onyx kind of bounce back here. Let's see other questions. BGU on XXIA. Well, I guess you could say this was, but what's your take on this one, okay, before we wrap it up here?
Yeah, it just qualified as a viable gap up 4 days ago. So
Okay.
you could have bought it, and I mean, again, it's a bit of a thinner name, and the fundamentals look okay, but you're gonna incur a little bit more risk in this kind of name.
Yeah. Anyways, that's really all we have time for. So we'll have to cover some of these other questions in the next webinar. So we got suddenly we had a lot of questions come in, but just the general tone of the market is it's just kind of quiet. You got a nice index move today, but you got some stocks flipping out and heading in different directions. You see some stocks breaking down, like you have the Regeneron. We have NSM is flipping around right now, but it's trying to hold. So it's trying to hold that low. So it doesn't. It's probably a function of the market helping out. So what else? Any final comments before we sign off?
Nope. I think it's hopefully we maintain this uptrend.
All right. Well, that's it for this week, you guys. Sorry we couldn't get to everyone's questions. We'll just have to file them for next week. So get them in early, and we'll be able to get to them. So we'll catch you guys later, and good luck.
So long, everyone.